Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark tells us about new equity market records being set and why the Canadian dollar didn't pop up with higher interest rates. Polar Futures Group co-founder Victor Adair comments on how greed has taken over the markets and also talks about the Bank of Canada being fairly confident in the Canadian economy, except for the black cloud hanging over NAFTA. To wrap up the show, we have a panel discussion about the advantages small companies can gain from using rights offerings to raise funds. Plus, coming up at the end of the show, we'll have company showcase updates from Larry Reaugh of American Manganese, Aben's Jim Pettit, Carl Data Solutions' Greg Johnston, and Cascadero's Bill McWilliam. We'll talk to Ross Clark right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, the CEO of Chartworks. Welcome back to the show, Ross.
Pleasure to be with you, Jim.
You said it's getting a little boring with the equity markets hitting new highs every week.
It is, and here we are. It's this week. I got a little bit of a hiccup on some of the Dow stocks at the end of the week, but not, a pretty good week overall. Midweek, you had a shakeout there. S&P finally had a down day for a change, and the Russell 2000 actually did an outside reversal, making a new high for the move, and then closing down on the day. That got some of the bears a little bit excited, but when we go back and look at it, those kind of reversals in the Russell actually got over 30 of them going back into the 1990s, when you've been sitting up around highs, and actually we use 100-day nominal highs and measure for reversals from them. And in all but 4 instances, the market bottomed out within the next 1 to 5 days, and most of those actually had no downside follow-through. They turned around, which is exactly what we had this week. And that Russell 2000, for all that it's been, I like to look at the week's items in the move here, because the S&P and the Dow, which are really getting the benefit right now of the new tax regime in the States and the potential flow of repatriation of funds back into the States for the big cap stocks. In the smaller names like the Russell, they just haven't had the rally this year. So what we want to keep an eye on is that sector to see if it starts to show any signs of rolling over. And for all that was a shakeout midweek, it was really just a test of the most recent breakout. So things are still looking healthy. Trend is up. The moving averages that we look at for potential support when we do have our first decent correction, they're having a tough time keeping up with this run. So the 20-week average, which is a key that I'm looking for, is right now about 7.5% beneath the market. Originally, that had been fairly tight. It's been looking for maybe a 3 to 4% correction, but now would probably see something more in the vicinity of that 7% when it finally does come about. And maybe that's further along in this seasonal play than we've been so far.
Is gold reaching an important juncture?
Yeah, gold is, it's boxing itself in. We've had just an exceptionally good move off the bottom. The December low up about 8% or so, just over $100 on the rally. Very good. I think it's something like 25 or 26 trading days since the bottom. The norm on these rallies off at this point of the year are generally in the 25 to maybe 30-day range before you see an interim pause, and the strongest of years can continue on, but even in those cases you tend to see a bit of a pause fairly soon here. We've done some work on the longer term and what might happen as to whether we break out through the 1345, 1350 range, or whether we have a correction. And the odds are looking pretty good here that if there is a correction, we've got some nice numbers in terms of where we can be looking for support in the coming months. If it's a breakout on the upside, then one needs to go with that. But the work at this point would suggest that a pause would be very normal. If you start to take out any of the previous week's lows right now, so going into next week, if we were to take out that midweek correction that we had this last week, that would be a place for traders to probably lock in some profits and look for a better buying opportunity.
Earlier in the week, the Bank of Canada upped its trend-setting rate. However, unlike the last time they upped the rate, the Canadian dollar did not pop higher. How come?
Well, how much of this has been factored into the marketplace? They clearly had this telegraphed well ahead of time. And if when the economy is strong, it's typically you're going to have higher interest rates. The cost of money does go up. And you can see that whether it's on the administered rates, which you're getting from central governments, central banks in the U.S. or Canada, or whether it's out in the free market rates that you see in the 10 to 30-year bonds. Here we are with the U.S. bond yield starting to move up through highest levels we've had in the better part of the year. The 10-year rate in terms of U.S., we're currently up at about 264, and you would expect to see rates move higher with a stronger economy. Don't look for the rates to hamper the market. The whole theory being that if you can get a good return on your money, you're willing to pay more for that money that you're borrowing. So with the way the markets are running these days, I'm clearly, and the economy, clearly, I think you can expect to see higher rates, and that Bank of Canada move is just, probably the first of another, probably two this year before they're finished.
Ross, thank you so much for the update.
Nice to be with you, Jim.
My guest has been Ross Clark, CEO of Chartworks. Coming up, Victor Adair, co-founder of the Polar Futures Group, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, President of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. Welcome back to the show, Victor.
Well, thank you, Jim. Good to be with you.
The global stock markets have been rallying sharply over the past year. We've seen record highs in the Dow and other indexes. What do you think is happening, and will this skyrocketing reach for the stars continue?
Well, I see you're going to just start with a tough question. We've had the stock markets run pretty hot here since we came back from the Christmas break. I think we had one point here where the Dow ran up 1,000 points in 8 days. We could say that we're at the euphoria stage of the market. You know, there is exuberance, whether it's irrational or not. Another way of saying it is that the appetite for risk is really strong. And by the way, it's not limited to the American markets. This is going on in stock markets all around the world, that people are buying stocks because they're going up. You know, that acronym FOMO, the fear of missing out, kind of has replaced the old acronym, which was TINA. You know, there is no alternative. It seems to me that the market here is more emotional than rational at the moment. Clearly, this is not a value investors parade where we're running up like this. Some of the ways of looking at it. For instance, Investors Intelligence runs a survey between who's bullish and who's bearish. Right now, the survey, as you can expect, is heavily in favor of the bullish crowd. There's about 6 bulls for every single bear. The ratio on the spread here is the widest it's been in 32 years. That takes us back to 1986. We've gone so long without even a modest correction. And one of the ways that I would look at this from a trading perspective is what I call positioning risk. I think this market, to put it in the vernacular, is kind of priced for perfection, and that if anything bad happens, we could, really back the market up pretty quickly. So the way I would approach it is, or the way I am approaching it is, I am cautious about this. I'm just not one to jump on a runaway market like this, because I just don't know how to manage my risk. I'm certainly not saying go out and short it, but I'm not a buyer here. It's just these kind of markets are from my perspective, are tougher to trade.
Well, many of our traders now, over 9 years, have never seen a down market. They may not even know how to deal with one because it's not part of their experience set. Yeah, you're right. And that's what I mean by positioning risk. And another way that shows up, another term is complacency. And we see that volatility in the market has been really, really low. But then, vol, like across asset classes, has been really low. And I think part of that is because of the general concept of reaching for yield, that people have figured there's maybe free money by picking up nickels in front of the steamroller. So you sell option volatility and collect a premium. Anytime a market races one way too far, it'll have a correction. I'm trying to think of the Bob Farrell expression, but it's something like the public buys the most at the top and the least at the bottom. And I think we're somewhere around that phase right now. We could go, and this is the thing, we could go a lot higher. I've seen so many markets that get emotional and are running that maybe 50% of the move, happens in the last 10% of the time. I was rereading a book the other night. This is my bedside reading. It was the original Market Wizards interview that Jack Swigert did back in the late 1980s. And one of the guys was saying, and forgive me if the numbers are wrong, but he's saying, hey, look it, we had soybeans trading up to $7. And everybody and his dog is saying they can't possibly go any higher. Soybeans had never been this high before. And soybeans went to 13. We had beans in the teens for the first time ever. So just because something is at new all-time highs doesn't mean it can't go a hell of a lot higher. But I'm noting that there is this exuberance, there's this voracious risk appetite in the markets,
and I'm a little nervous about that, so I'm being cautious.
What about the people who've said you don't need a financial advisor anymore, you just need to buy some clever ETFs?
Well, that's all part of what I'd call positioning risk. And the reason you go out and buy the ETF is, why pay that financial advisor exorbitant fees, when you could just do it yourself. I think this is symptom, and, so far it's working, and I remember like the Vancouver real estate market has been going up, it seems, for my entire lifetime, and any time anybody would say, it's gone up too far, people would say, well, that's all it does. It just goes up. So don't be an idiot. Just keep buying it. I see it as an emotional market, and I see that as you were saying, people are just buying an ETF instead of using an advisor who's maybe got a lot of experience and seen ups and downs before. Well, that's what happens.
Well, isn't the art of maintaining wealth knowing when to get out and maintaining your money when everybody else is losing theirs?
I used an expression the other day, I just remembered this, back in the old days on the floor of the Chicago Board of Trade, the hardcore boys down on the floor would, all the phones would be ringing, and the public is phoning in to buy. So the expression was, when they're yelling, that's the public, you should be selling. So that's the kind of the hard-ass way of looking at it. I think, you've got quotes from people like the Rockefellers that would say, I always sold on the way up, not on the way down.
Interest rates have also been rising. If they keep going up, will that stop the stock market rally?
I think that it's certainly interest rates are rising, and yeah, that is a possible Achilles heel. I mean, in the American market, you've got 2-year yields now that are at the highest they've been in 10 years. The 10-year yield is at a 4-year high. We're at 2.65% on the 10-year. We've just had a couple of the famous bond kings come out recently and tell us that the bond prices going up are going to act as a brake on the stock market. Just to put that in perspective, by the way, I mean, the 10-year yield at 2.65% is double what it was when we were in the middle of the summer 2016 when Brexit was happening. Now, mind you, those were the lowest interest rates we'd seen in, 5,000 years or something, and we had a number of sovereign countries with negative interest rates. But speaking of negative interest rates, I mean, Germany still got negative interest rates, as do a number of the countries in Central Europe, and the German economy is red hot. Well, I mean, what are you doing with negative interest rates when the economy is so strong? I think there is clearly a real risk that interest rates can go higher. We have the shape or the people that are going to be on the FOMC board here as we go through the rest of this year. New people, obviously a chance for the market to be, for them to be more hawkish than the members have been in the past. And here's the real big Achilles heel, I guess, and I'll just try to make this really simple. For the last number of years, everybody knows the various developed countries' central banks have been putting a lot of money into the markets, okay, and been doing that by buying bonds and in some cases, in the Bank of Japan, even ETFs out of the market to put money into the market. Well, that's going to turn. We're going to have the biggest turn ever from 2017, 2018, and the amount of buying being done by the central bank is way back. The amount of issuance of bonds by the governments is going to be up. So, if the central banks aren't there buying the bonds, the public in one form or another is going to have to be there, and the appetite for buying those bonds as yields are rising might not be there. So that may cause yields to go even higher.
Yes, the Bank of Japan, now the biggest shareholder in Japan's 50 biggest companies, the whole country's economy is now depending on that.
Well, it has, and it's always interesting. This is just my temperament, okay? When everybody's kind of got a consensus view on something, I kind of wonder, well, what if they're wrong? And one of the things I see is that I think people just figure, generally, the consensus just figures that Japan is, what do they call it? A dead duck. They've got debt, they've got bad demographics, and they've got seemingly endless deflation. I see it in the currency markets. There is a massive short position on the yen as the world sort of bets against Japan. And I wonder, and I don't want to get in all the details, but I wonder if maybe Japan is a real turnaround story.
We'll have more with Victor Adair next on This Week in Money.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, President of Cascade Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Victor Adair, co-founder of the Polar Futures Group. He's the Senior Vice President and Derivatives Portfolio Manager for PI Financial in Vancouver. Victor, maybe Bitcoin isn't your area of expertise, but of course, we've seen it rise to astronomical heights and then plunge almost to the bottom of the ocean in a breath or two. People in that particular space, are they really risking the farm when they get into it?
I have not traded it. I mean, I've watched it. To me, it's been interesting. I did see, it's interesting that it seemed to make its high shortly before there was a futures contract listed on the Chicago markets and then fell about in half. It may be that it's just the guys that are involved with it, totally see the world in a different way than those of us that are not as well informed. I don't trade Bitcoin. I guess the way I've been looking at it is that it's another example of how a market can be driven by emotion rather than, let's say, value investing. So it's interesting to me, but I haven't been a participant. I don't think I can offer any real valuable comment on it.
The U.S. dollar index made 14-year highs just over a year ago, but since has been on a downtrend, falling to a new 3-year low this month. Do you think that trend will continue?
Well, that is really, really a $64 question. I mean, for the past several years, I've been U.S. dollar bullish. And I've done very well with that view. And I got to say, last year, I struggled with that. I mean, I lost money. And we've got the U.S. dollar here, as you're saying, at 3-year lows. The flip side of that is the euro is at a 3-year high. I've been puzzled a little bit, but with the euro, actually, I think it's up about 16% from where it was a year ago now. And I just think to myself, why is that? I mean, do people think that on a relative basis the euro is that much better of a place to be? And I'll take a little sidestep, and that is the euro is also at a 3-year high against the Swiss franc. Now, it was like 5 years ago, I remember having these images in my head about people around Europe who were looking at their local governments and thinking, God, I don't like where this is headed, taking a suitcase full of cash and going across the border at night into Switzerland to turn their euros into Swiss francs, what we would call a safe haven. I got to put a little rainy day money somewhere. And so now we've seen the euro has been rising against the Swiss franc, and that would indicate that those people that were worried about the euro and put money into Switzerland, a few years ago, aren't worried anymore. Perhaps there's been a change with the governments. The elections are over. Macron in France is being painted as some sort of a Superman and what he's going to be able to do. Anyway, there is massive bets on the on the euro, I should say, against the U.S. dollar. I'm a little for Missouri on that, but in other words, I'm thinking maybe the U.S. dollar can get better from here. But one of the things I have learned over the 40 or so years I've been trading currencies is that trends in the currency markets just go way further than seems to make any sense, and then they turn on a dime and go the other way. So it could be the U.S. dollar continues down.
Well, the Bank of Canada was raising short-term interest rates by 0.25% this week. They were very nervous about NAFTA. What are your thoughts on NAFTA and the Canadian dollar?
Again, I've got a bias here. I've done very well the past several years trading Canada from the short side. We made a low in January of last year at 68 cents. And by the way, there were lows everywhere in January of last year. Certainly crude oil making a low, but a lot of currencies, a lot of things made a turn in January of 2016. But more to the current picture here, the Bank of Canada was definitely the main event this week. What were they going to do? They raised rates. That was certainly expected. They seemed to paint a fairly positive picture of the environment in Canada, but then it was like, except for the uncertainty around NAFTA, and that's not just from currency traders. That's from let's say international companies that could build a plant in the United States or build a plant in Canada. And that plant would be providing product that would be sold in Canada and the United States. And you say, well, maybe we ought to just build it in the States. So that's kind of a drag on Canada's future. And I think the Bank of Canada was picking that up in their surveys. Another thing was that at the beginning of the month we had the employment report came out that showed back-to-back super strong gains in employment in Canada for November and December. And that number that they released for December was so much above what the street was looking for that it was a real stunner. It took us up to 81 cents on the Canadian dollar. I got to tell you, I'm in the camp where I just don't think they counted right, okay? To spit it out, I think we're going to see some revisions of that when we put out the next employment number. I'm short Canada right now. I think that cautiousness around NAFTA is warranted. However, and there's always a however, I also watched the Mexican peso. In the last week or more, 10 days, peso's been trading higher, like they're not so worried that NAFTA is going to be a problem. Canada looks to me to be at risk. One of the key things that are at one of our exports is our crude oil production. Because of, call it pipeline and other delivery restraints that we have, and because of the lack of appetite for our crude, let's say, the Canadian blend, that's Western Canada Select, is trading around $40 a barrel, while the benchmark that we all see, WTI, is trading, $63, $65 a barrel. That's a heck of a difference. And natural gas, by the way, same sort of thing. The Americans have got so much natural gas, they don't need that much of ours, and our nat gas trades at a steep discount to American prices. So overall, I'm more inclined to think Canada goes lower than higher. That's how I'm trading it.
Gold has been making some very bold moves lately. I'm looking at it rallied $100 from its December lows to the recent January highs. It's now only $25 below last year's highs and $40 below the 2016 high. In other words, if gold rallied another $50, it would be at its highest level in 4 years. Do you think the gold market is going to turn higher?
Well, this is a time frame question. Yes, actually, I think gold is going to turn higher. I think we've been making a big bottom here for the last few years. I'm not sure that we just launch from here and go up. I think the recent strength in gold, particularly since the middle of December, has been absolutely the flip side of weakness in the U.S. dollar. And as I said earlier, I think I'm inclined to think the U.S. dollar will make a turn from here, but I could also see it breaking down some more just because of the way trends are. There's a couple of things that really impact the gold price. One of them is the relative strength or weakness of the U.S. dollar, and the other is the real interest rates. And gold has been moving up here sort of without the support of real rates entirely, I think, because of the weakness in the U.S. dollar. There may be some geopolitical concerns, as there always is, that gives gold a bit of a bid. But, I think gold, I guess the thought would be, I think gold could well be higher a year from now, but I think we could see some weakness here in the next little while if we get a bid in the U.S. dollar.
Crude oil prices have been at a 2.5-year high with, as you mentioned, West Texas near $65. Do you see prices going higher from here? Some people have suggested they could plummet down to 30.
Yeah, okay, again, and this, I have traded crude oil from the short side since 2014. Here we are, 2018. I did not buy the market from, June of last year. We're $42. We ran up to $65 on WTI. I was not a buyer during that period of time, and that's kind of a head-banging moment. I'm thinking, God, my bias on crude really got in my way. Now, the good thing was I didn't get short there either. And right lately, here as we're trading around $65, I'm in the frame of mind where I think this is about as good as it gets. That's my terminology for crude. So I'm gently poking at it from the short side. I keep talking about positioning risk because this is just so important to me. There are massive speculator bullish positions in crude oil. I know that the production of crude oil, both OPEC and the International Energy Agency here, just today, have come out with their estimates as to what future production are going to be. They're both showing big increases from non-OPEC sources. Read, say in our part of the world, Brazil and particularly the United States and also Canada. I'm looking for crude oil to possibly have become overbought here at $65. I think if it starts to slip a little bit, the weight of some of the people that have been long for the past several months unwinding their positions could take it down some. So that's kind of what I'm looking for. Let's say you might use it like a surfing metaphor. I'm looking for a wave of selling from those folks to ride that wave.
Copper has been on a tear over the past year. I remember when it was around $2 a pound. It's now well over $3. Is that an indicator of what's happening with commodities in general as an asset class?
Copper has had a great run. I think we're up more than 50% from the lows. I mean, remember now, from 2011 down to that low I talked about in January of 2016, copper prices, as a lot of commodities, were just in a really brutal bear market, and so we've had a recovery from that. I think there's some thinking in the world that commodities are really cheap. And that may, by the way, have put a bid into the Canadian dollar and the Australian dollar and the other commodity currencies. I do look at where's my notes on that? I've got the ratio of commodities to stocks, and here's one I use. I use a Commodity Research Bureau indices against the S&P 500. It's at a 18-year low. In other words, commodities from their highs in 2011, this is that commodity index, are down 74% against the stock market during that period of time. So if you were running a big portfolio of assets and you do reallocations and that sort of thing, you might say to yourself, gee, some of our stocks have run up so much, so far, so fast, maybe we should take some money off the table there and put it into the dogs that are out there, like the commodity indices, and kind of rebalance ourselves. Maybe there's some of that going on in the world. I could see where people would be inclined to do that. Commodities have really been beaten up while stocks have just raced to the upside. So maybe it's time for the old switcheroo.
If you took the so-called FANGs out of the equation, have the stock markets really done that well?
Well, it depends on what index you're going to use. But I think if you looked at the Dow Jones, just that. I think if you took Boeing and Caterpillar out of there, and there's one more I'm forgetting because I'm just not that good at memory. But I mean, those two stocks are up huge. Maybe they're up half, I don't know, of what the Dow gained in the last year. And they're definitely not FANGs, you know. I mean, one builds airplanes, the other builds bulldozers. So the FANGs have certainly been huge, like in the NASDAQ index. So yeah, there's another Bob Farrell quote along the line of, you know, when the market breadth gets really narrow, in other words, when there's like a handful of stocks are really leading the parade and the rest of the guys are just kind of struggling along behind, that's a time that you want to be cautious. But yeah, maybe it's always like that.
Are we still really dependent on China? And one of the things about China is for years they always predicted their economy would grow 6.7%, and at the end of the year they'd always announce it's growing 6.7%. But this time around the numbers really do seem to be real. Can China maintain that, and is that good for Canada?
Well, if China, I mean, in my lifetime, where China kind of was an awakening factor was, 18 years ago, as we made the turn from 2000, and the U.S. dollar was really high and started to fall, and commodities started to rally. You know, the Canadian dollar make that 2002 was trading at about 62 cents, and by the time 5 years later, November of 2007, we're up at $1.10. And, you know, that was the commodity boom was on, but what was all driven by was China. And obviously China is hugely important, and I've always thought it's so important. I wish I could be better informed as to what's really going on there. You get all these different stories, and of course there'd be some people that were forecasting that it's going to come crashing down, that the numbers are all a sham and empty buildings being built, and on and on and on and on. I don't know. If China, they've just gone through the big party Congress last fall. Xi is clearly in charge. It is going to it's going to be a huge impact on our markets, and I don't know that we really get accurate information. So increasingly, I just look at the market. Okay. I look at the price of copper rather than trying to guess whether or not China is going to be a buyer or seller of copper. I'm just trading the price now rather than trying to pretend I can find out something that's not already known.
Victor, how can people find out more about the Polar Futures Group?
Well, the Polar Futures Group is essentially myself and my son, Drew Zimmerman, polarfuturesgroup.com.
Victor, thank you so much for being on This Week in Money.
Jim, it's been good to talk to you. Thank you.
My guest has been Victor Adair, co-founder of the Polar Futures Group. Their website, polarfuturesgroup.com. Coming up, a panel discussion on the advantage of rights offerings over private placements next on This Week in Money.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. In this segment, we'll be talking about rights offerings with Executive Vice President of Mackie Research in Vancouver, Shayne Nyquvest, President and CEO of MGX Minerals, Jared Lazerson, co-founder and president of Glance Technologies, Penny Green, and president and CEO of Tower One Wireless, Alex Ochoa. Shayne, what are companies doing to finance themselves in today's environment?
Well, in today's environment of, shrinking brokerage firms, we've gone from 50 brokerage firms to 5, although the good news is there's 3 new ones this year, which I'm cheering for. Bank domination has reached record levels of 82%. So, companies have been forced to the sidelines, and, fortunately there's been enough forward-thinking people here, like some of the people at the BC Securities Commission who've done a great job in trying to innovate and pick up, some of the slack where it's been left off. They've had the foresight to approve 10-for-1 rollbacks, to be followed by rights issues. Rights issues are the fairest way to treat shareholders. 82% of all financings in Australia are done via rights issues. Rights issues, treat insiders and all shareholders equally. It also took Donald Trump, it's the Trump plug. It took him about 2 weeks used to be U.S. shareholders could not exercise rights. They now can, which opens up the market to a much larger audience and treats them equally as fairly as well. It used to be their rights were sold. Rights trade in the market for a period of 21 days. You can buy them, sell them, exercise them, and they're usually priced aggressively. The key to venture capital is being able to raise enough money to keep these companies going. So you got a better chance of producing better companies, the larger pools of capitals that you can raise. Obviously, the gatekeeper function, needs to be part of it.
Shayne, from a broker's point of view, what are the advantages of warrant financing versus a private placement?
Okay, well, let me try and tackle that twofold. In this day and age, as I've told you, from 50 brokerage firm to 5, there's a lack of analysts, there's a lack of coverage, there's a lack of support. So, in this day and age, and what used to be imprudent maybe a decade or so ago, which was to spend a whole lot of money on IR and, getting your story out, it has never been more prudent than it is today. Because if you put out a news release, your audience is so limited by the fact that there's only 5 brokerage firms now. You have to build your own audience. You have to build your own shareholder base. So, and that cost gets incrementally cheaper as you go on, because once you've created 5,000 shareholders and you wake up one morning and you don't know who's on the bid and who's on the offer, you're officially a public company. Until then, you're not. So, how does that relate to unplugging the system? Brokered or non-brokered private placements, this mountain of paper that is really just a backdrop for securities overregulation is not the answer. The answer is to price these things in the context of the markets, to, be able to raise the maximum amount of money for the companies behind them. They're free trading units. They're not 4-month hold rigged situations that are, not tradable for 4 months, and then you got a mountain of stock coming at you. And bottom line, the back office system and the over-compliance that we deal with today anyway gets completely bogged down when the frequency of money or the velocity of money increases. So there's no time or effort or compliance wall that you can put up to, try and weed through these things. Who needs less disclosure than an existing client who probably knows more about the stock than the broker who sold it to him and is now selling cars anyway? That is the basis of allowing that these issues can be sent out, subscribed for, and you've got a 5 to 10 day period, to disclose what your proceeds are for, and the cost is 20 grand as opposed to 250 grand for a complete prospectus, which is frankly a waste of time and money for the investor who just wants the maximum amount of dollars to go to progressive things like building companies. I'd take that even further. In my opinion, lawyers and accountants should have to take 25% of their fees in stock. I don't find it a conflict of interest. I find it part of the gatekeeper function, and I think it's it keeps them involved in the progressive nature, because time is money and wasting of time is money, and so is timing. Timing is only everything when it comes to the markets.
So Shayne, how exactly does one exercise a warrant?
So warrant redemption program, early warrant redemption programs are just as they're described. There is a warrant out there that's not in the money. It's maybe 18 months out, and maybe best to just give you a real life example of how that benefit works. For example, we did a rights issue on a company called Glance. Glance did a rights issue, and they had warrants that existed, some 50% higher than the current market. They were expiring. The shareholders were given the option to convert those to a free trading unit priced in the context of the market, which for them is a tremendous benefit. Their warrants were going to expire worthless. We decreased the price and gave them a free trading unit and priced it in the context of the market. And those are all treated, your shareholders are all treated equally. And that's what it's all about, is increasing shareholder value by building good companies, being able to raise, larger pools of capital gives you a better chance of creating better companies. So to be specific, those warrants were 50% above the market. They were repriced into the context of the market. There was a period of time that was given whereby they could sell their warrant and someone else could exercise it, or they could exercise it into a free trading unit. I think we had a 99.9% success rate on that, and you'd either have to be out of town or out of your mind to not exercise them. When I started in the business, I wasn't smart enough to know there was no diamonds in Canada. So now I wake up every morning and there's 15% of the world's supply, 15 billion a year in revenue, and 8,000 jobs. That's what venture capital is all about.
I'm now chatting with Jared Lazerson, President and CEO of MGX Minerals. Jared, why did you choose to do a rights offering instead of a private placement?
Two reasons. The first and foremost was really to offer to our shareholders. We have a tremendous support from our shareholder base, and we wanted to give them first cut at being involved in any new financing, a very democratic process. The other piece is free trading. The rights period is fairly long, the minimum period under which you have to wait until rights holders subscribe to the rights. But once the offering is closed, it's just a matter of days before having free trading stock. I'm a long-term investor. I don't really look at a 4-month hold as being significant, but a lot of people don't like having this looming date or overhang of financing, as we usually term it. So this financing overhang basically kicks in right away with the rights offering, but it means you're through it that much quicker. So anybody that needs to rotate stock or sell stock and keep the warrant, or sell the warrant and keep the stock, whatever their investment strategy is, you deal with it in the early phases and not 4 months down the road when you kind of have this looming date that can be a real clip on the stock. So those are the two main reasons.
Jared, how can people find out more about MGX Minerals?
MGX Minerals traded on the CSE under XMG and on the OTCQB under MGX MF. and of course, mgxminerals.com.
We're now talking with Penny Green, co-founder and president of Glance Technologies. Penny, you did a rights issue earlier this year. How did that work out?
Hi, Jim. The rights issue went very well. We were approached by Mackie earlier on in the year to see if we wanted to try out a rights issue under the new rules. We had seen the success that MGX Minerals experienced with it, and so we went ahead and did it. It was very successful. We were able to offer all of our existing shareholder base the right to buy a share at a slight discount to market. We ended up selling about 80% of the rights that were offered, and we really got to benefit our shareholders who participated. Later on in the year, we did some additional financings, and eventually, our stock moved up, so we ended up with some very happy shareholders.
Penny, why would you do a rights issue opposed to a private placement?
Well, the beauty of a rights issue, Jim, is that when shareholders exercise their rights, they get a free trading share or a free trading warrant. So typically with a private placement, there's a 4-month hold. And in the public company world, 4 months is a long time. A lot of investors are more reluctant to put their money on hold for 4 months, whereas if they see that a stock is trading well, that has good volume, and they know that they're going to get a share that's immediately they're able to sell it, then they're more likely to put their money in.
Penny, can you tell us about the early warrant incentive program Glance did?
We did the early warrant incentive program on the advice and the guidance of Mackie Research. Mackie Research had worked with the BC Securities Commission to come up with a way that would allow companies to raise money in a more efficient manner. And what we did was we took our existing warrants, which were priced at 33 cents, and we repriced them at 20 cents, which was more at market, for a period of about 45 days. And then we also took another set of warrants which were priced just above market, and we extended them for a month. And then in combination with that, Mackie made some excellent referrals to us in terms of how to increase the awareness of our stock. They put us in touch with some great publicity companies, including yourself. And we've really been putting a lot of time and energy into making sure that the American and Canadian investor public are aware of our stock, that they know we exist and we have a good story to tell. So we've been telling it to whoever would listen. And the great thing has been that a lot of people have bought our stock and our price has moved up significantly.
Penny, how can people find out more about your company?
They can go to one of our websites, either glancepay.com or glance.tech.
I'm now chatting with Alex Ochoa. He's the president and CEO of Tower One Wireless. Alex, what's your experience been with warrant raising of funds?
Well, what we did was the early warrant exercise, which brought in a critical part of cash to the company at a time when it was needed. That was spearheaded by Mackie Research, and what it did was basically facilitate attracting those investors, since there was no need to lock them in for 4 months on typical financings. And I think that's a pretty clever route for all companies that face different stages of their financings to take.
Alex, could you give us a little more information about what Tower One Wireless does?
Absolutely. Tower One Wireless is a telecom infrastructure company. We're more a real estate company than technology, where we build cellular towers across Latin America, currently in Colombia, Argentina, and Mexico, and we lease them out to the mobile operators on 10 to 20-year terms. This business is traditionally one that has been held by the larger companies, which are only 3 publicly traded entities. We're basically the only nano or small cap stock in the space with the same clients in the same countries under the same rental terms. So the entry point into this industry has been relatively impossible. The options today are either buying 3 larger stocks at about $140 a share, or striking $5-10 million checks to the Blackstones and KKRs that invest into the tower space. So having the ability to have the same clients, which are all AAA tenants, and providing an investment alternative for investors into the space, I think is one thing that has created a lot of attention in the space.
Alex, how can people find out more about Tower One Wireless?
I think the easy place to find more information is on our website, www.tower1wireless.com. We're listed on the Canadian Securities Exchange, also over the counter on the OTCQB, and in Frankfurt. So I think we've managed to cover the investor base we have today in these exchanges.
And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, and our panelists, Shayne Nyquvest, Jared Lazerson, Penny Green, and Alex Ochoa. Plus, stand by for company showcase updates from American Manganese CEO Larry Reaugh, Aben's Jim Pettit, Carl Data's Greg Johnston, and Cascadero's Bill McWilliam. I'm Jim Goddard. If you have any questions for the show, you can send them to info@howstreet.com. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, the CEO and president of American Manganese. Welcome back to the show, Larry.
Thanks, Jim. Always happy to be on the show.
We have a review of one of your news releases, and then we're going to talk about Cobalt.
Yes, I think that the news release speaks for itself. It basically says all the accomplishments the company made last year, which were excellent. Everything just worked perfectly for us. And then we're going to talk about the ongoing programs coming up. And one of those things that we're going to talk about is a business plan, which we hope to be able to start to show the economics of what this is all about. And that said and done, I'm not going to spend a lot of time on this, but I'm getting criticism, of course, on from my predator friends about the fact that I'm complaining about the getting shorted. But it's not obvious to anybody that I'm getting shorted. Maybe they should look at the closes every day, where 500 to 2,000 shares goes down to the lowest price of the day after day after day. And the other thing is they say there's not enough liquidity in the stock to be shorting it. Well, we've traded 380 million shares in a year and a half, which is 2.5 times the float. If that's not liquidity, I don't know what liquidity is. But moving on to more positive things, people should review that press release, because it's got interesting things we talk about, like a business plan, the fact that we are pursuing a partner, and what we're going to do going forward. Now, I'd like to talk about Cobalt, because there's a lot of things in the news about Cobalt lately. And Cobalt has recently hit a high of $78,500 a ton, currently trading at $77,000 a ton, which is a significant increase from the $75,000 that we talked about before. Now, what about Cobalt? Well, Glencore's coming on. I see numbers from 17,000 tons a year up to 29,000 tons a year. I see articles that this is going to drive the price of cobalt down. And for all intents and purposes, if it does slow the rise in the price of cobalt, it's not going to make a lot of difference to us, because these prices are just wild, for any kind of a startup that we may do. And it's also wild for any cobalt miner out there. So it wouldn't hurt to have the market stabilize a bit and some more supply coming on. We need that. And to give you an example, I was reading where Japanese traders could not get delivery of cobalt in December. There was none to be had. All the 2017 cobalt was gone. So that tells you that we're getting close to critical here when it comes to the supply of cobalt. Now, the Katanga project, which is Glencore's project that's coming on, will eventually produce up to, on their estimates, about 29,000 tons of extra cobalt a year. But, how fast are we increasing on the cobalt side, on the demand side of it? It's going quite fast. There's all kinds of ways to bring that down, and one of them is to reduce the amount of cobalt in a battery. So when you reduce the amount of cobalt and the other materials that go with it, you're reducing the efficiency of the battery. So, that's a reluctant step that anybody will take. Cobalt replacement does the same thing. And then we got to turn around and look at, what else is happening in the cobalt stream that could impact the price? Well, the DRC are talking about doubling the royalty that they have on cobalt from 5 to 10%. And when you stop and thinking about it, any existing miner out there is not going to feel that too bad, but they're going to push back. If they don't push back, then they're setting themselves up for a 20% or a 25% down the road. So you'll see the producers of cobalt pushing back on this legislation that's coming out of the DRC. That's to be expected. You're seeing that all over the world where, governments get, eyeballs for the treasuries of the companies that are producing these things, forgetting the fact that they took all the risks and spent the billions of dollars to get it going. Now the government wants an unfair share. So, cobalt, I think cobalt is going to be in play. It's going to be up and down here in the next year or two. I still believe it'll break $80,000 a ton in the next 6 months. And, I just want people to know that we, American Manganese, will be a cobalt producer. It's not going to be a producer from mines. It'll be a producer from spent batteries and also scraps. So the people have to start recognizing that we're a player in that market. And because we're not getting the spillover from the excitement that's beginning to build in the cobalt market itself. I mean, we're not looking at a project that has to be drilled. We're not looking at a project that has to have a feasibility study or be permitted or years away from production. We're looking at batteries. We know how much cobalt is in each battery. And if you look back at some of our press releases, we've indicated what some of those batteries contain in the cathode materials. So, yes, we are a player in the cobalt market, and we will eventually become a prominent player. And people, maybe not the market so much is recognizing this, but some of the people out there that are in the business are recognizing it. And so I can't talk about what we're doing currently about that, but we are active in that area, which means I put in the thing, seeking a partner. And I just want the shareholders to know that the company is trying to capitalize on the fact that we do get 100% of the cathode metals back, and that we believe that we can show this can be done on a continuous basis with a pilot plant, and we do know that we can get enough scraps to, for a small commercial plant, 2-3 tons, maybe a little more, of production a day. And that's not insignificant when it comes to the bottom line for a company, because if we get scraps, our costs go way down. We have labor, basically a little bit of power, and the reagent cost. And that's pretty much covers the whole base on that. So what I want people to think about, and our shareholders to think about, is we are an up-and-coming cobalt producer, and that they should start regarding us in that light, no different than they do for a company that's going out seeking resources to capitalize on a feasibility study or eventual production of a mine. And our mines are already known. We know what the content is. We don't have to drill it. We don't have to take it apart and evaluate what's in it. We know before the battery's ever taken apart just exactly how much cobalt, lithium, nickel, manganese, and aluminum are in those batteries. So we're off to the resource show. Just to let everybody know, we'll have a booth there, 708, and that we'll be manning that booth. I've got a lot of meetings set up down there. I may not be at the booth all the time, but you can leave messages there for me. And I expect that this is going to be a great show for us, and I expect the show we're going to in Silicon Valley on February the 1st is even going to be a greater show. So I wish you a great weekend, Jim, and I wish the shareholders a great weekend. And we're off to the show on Sunday.
Larry, where is American Manganese traded, and how can people find out more information about the company?
American Manganese is traded on the TSX Venture Exchange. It's under the symbol AMY.V. It's traded on the U.S. exchange under the symbol AMYZF. And it's traded in Frankfurt under the symbol 2AM. We have a website, AmericanManganeseInc.com, where you can find all the up-to-date news and any PowerPoints that we may have, or drawings or whatever, pictures. They're on the website. And you can always reach me at LREAUGH@AMYMN.com, or phone the office directly at 778-574-4444.
Larry, thanks for the update.
Well, thanks, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. We were speaking on January 19th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thanks, Jim. How are you doing?
We're doing great. You have an update for us on the Chico project in Saskatchewan.
Yep, that's right. We are just putting I'm just reviewing the budgets and everything right now for it. Should be approved probably by the end of the week. We'll be ready to go mid-February. We're doing a little tweaking with our permitting, camp permitting, but should be good to go. At the latest, it would be before the end of February, but it's all good. It's all good. We're planning right now. It's looking like 2,500 meters, 2,000 to 2,500 meters. We'll get that ironed out real soon. We've got our IP surveys come back. We've put a small 3D image of the chargeability part of the IP survey. It's pretty impressive. It shows the area that we're concentrating on, that we've done a lot of sampling, and that what we've done a lot of historic drilling. Sorry, not we, but in the past, there's lots of historic drilling, but nothing really below 100 meters in any way, shape, or form. And this new IP we've had done over the two main shear zones that we're concentrating on shows a tremendous chargeability feature, sitting right underneath these shear zones, just out of reach of the old drilling. We did have some really good intercepts back then, back in the day, but it's, what's exciting is just another 100 meters deeper, and you're looking at some, sizable anomaly that we've got to go test. And to be honest with you, it corresponds with what SSR to our north, which is the Silver Standard's new name. Their discovery profile and all their geophysics starts at about 200 meters, and that's extending south from the Seavey and Santoy deposits for the old Cloud Resources mill. So, it bodes well. What we're looking at is right in around 200 meters, so we'll have a couple of these holes extend down. We're just working on the number of holes and the placement of the rigs for now, but no, we're getting excited.
Jim, what's happening generally with Aben?
We've been doing a lot of reviewing of the last season in the Golden Triangle at our Forrest Kerr project. We're pretty happy with the way this north boundary zone turned out. It would appear we've got a pretty good zone that corresponds really well with what is called the blind fault. We're doing a little bit more research on that fault. There was work done there in the past, actually up above us, higher up the mountainside, where there was some pretty tremendous silver numbers produced. And then that fault sort of carries on down below where we were drilling and up the other side of the valley. So, it's a natural place to look because it's a major fault structure that comes off the main Forrest, the Kerr fault, which is the big defining fault in the region. So it's what you look for, is these offshoots off that. And then up in the Yukon, we've had some tremendous results this last season with a very small program we did. This is the Justin project, just tied right on to Golden Predator. But it looks like we've come across a fairly serious vein structure that looks a lot like what they're working on, the 3 Aces. The bulk sample we sent in, 40 kilos, came back with 1,300 gold grain samples, and by far the bulk of them, 80% anyways, were pristine. So, we're sitting on top of something there. If you look at our recent news releases, we've got some assays back from some sampling as well, and I think we're very excited about that. We're kind of anxious. We'd like to get back up there too. So we may have more than just the Forrest Kerr to look at next year. We may do something up here. But that's, for now, that's all in the works. That's being planned.
Jim, where is Aben traded and under what symbols?
We're traded under ABN on the venture exchange, TSX.V. We are also traded down, I guess, the pink sheets in the States, ABN.V. And any contacts, you can contact the office at 1-800-567-8181, or contact me directly, or Don Myers. It's all there on the website.
Jim, thank you so much for the update.
You bet. Thanks a lot.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. Our conversation took place on January 17th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Greg Johnston. He's the CEO and President of Carl Data Solutions. Welcome back to the show, Greg.
Thanks, Jim.
You guys have some pretty exciting news to tell us.
We do. We're our company was always built to move into different verticals, and this morning we announced a partnership which brings us into the fintech sector, in particular cryptocurrency and cryptocurrency mining, and also the software, the features, and the data mining that goes along with that.
And how complicated is that, and how does Carl Solutions fit into that?
Well, initially, it's actually not that complicated. We're buying the hardware really to learn more about the space, and also the domain expertise that we'll gain by partnering with Connected FinTech will allow our people to adapt our software and our tools to be able to assist in that area. There's also stuff associated with the industrial Internet of Things, which are very exciting, we think, in this area. In particular, there's a data economy that will be arising with a data marketplace, and pretty soon most of the transactions that are in our area in terms of sensor monitoring and collecting information from sensors and getting them into applications will have some form of machine-to-machine transaction, which may involve cryptocurrency. There's specifically a cryptocurrency that's being developed called IOTA, and IOTA, and what it's doing is it's being developed strictly for transactions that occur through the Internet of Things. Now, of course, all our clients are on the Internet of Things, or our devices are connected, and so this affects us quite a bit. Smart transactions and machine-to-machine transactions are a place that we need to be.
Greg, can you give us some background to Carl Data Solutions, some of the things you've done?
Sure. We're a big data company and an IoT company. We collect a lot of information from a lot of different sensors and devices and data sets. We collect and we put all that information together, and then we serve it out through web services or SaaS-based applications to companies that do advanced analytics and modeling of data to be able to make informed decisions regarding typically infrastructure.
Where can people find you traded and under what symbols?
We're traded on the CSE, symbol CRL, on the OTC, symbol CDTAF.
Greg, how can people get more information about Carl Data Solutions?
They can send an email to me at greg@carlsolutions.com or info@carlsolutions.com, and we will send them back as much information as they require.
Greg, thanks for the update.
Thanks very much, Jim.
I've been speaking with Greg Johnston, CEO and President of Carl Data Solutions. I'm Jim Goddard. We were chatting on January 17th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
My guest is Cascade President, CEO, and Chairman Bill McWilliam. Welcome back to the show, Bill.
Thank you very much, Jim.
You have some pretty exciting news to tell us about Cerita Este.
Correct.
Well, what's going on there?
What I'm going to explain today, I'm going to go through a list of checkoffs, if you want to call it that we do on our mining properties. And it's all the categories we have to look at and do data and get data from to make a decision on at each step how to proceed to the next. So I'm going to give. There's no data here. Everything that's I'm telling you is in the public domain, and we should just remember that there are no drill holes in this property, and that the uncertainty is significant. But I'm going to do some future predictions about what this may be.
So, dust off the crystal ball and take a look there for us, Bill.
Yeah, we'll do. Okay, the first item is the location of the deposit, of the showing. I got to call it a showing as well. The location is in a basin and range setting with the mountain range of Sierra Tacataca to the west and the Arizaro Salar to the east. So it's constrained by those two things. So you're looking at a narrow, linear property. The pedigree of that property is exceptionally good. There's a linear structure that controls the porphyry systems in this area, and some of the properties in this area are some of the biggest copper deposits in the planet. Starting with Cerro Colorado, I'm just going to read them off and give everybody an idea, which is a very large porphyry. Collahuasi, which is was owned by Falconbridge. It's also still in production. El Abra is a Chilean government property that's in production. Esperanza's there. El Salvador. Chuquicamata is at the top part of it, another Chilean deposit called Gabi. And Puerto Rico's Mina Marta, Andacola, and Tacataca Bajo, which is the property that we adjoin to the west. So this is a prolific area of large-scale systems. We shouldn't be surprised that Cerita Este is starting to look like one of them. But now it's in a very rough state, but we're refining everything about that, and this is a very interesting property that has a chance. The second thing is the property description. The property basically is between 3,900 and 4,100 meters above sea level, and it's a rolling country. There's very little relief. It is located in a graben, which is a downdrop block, and an ideal place to find mineralization, as both sides of the graben are big structures, and they go into the mantle. The access is excellent. We can drive right to the property, and we don't need ATVs or any special vehicles. It's all very solid. It's a solid area of soil and some outcropping rocks, but it's a perfect place to work. There is no infrastructure. Is the next thing you got to consider. There is no infrastructure in the area with respect to power. There's water. There's adequate water. No power line. No gas line. And that is going to be an issue that has to be solved. And TACA is working on that, and we're not involved in that right now. But I know we have to have access to the same things as TACA. So the infrastructure is weak at this particular time. The ownership of the property is it's owned by Cascade Minerals Canada, which is 70% owned by Cascade Copper and 30% owned by Regberg, our partner from Singapore. The structural condition of the property, we have mapped this thing in great detail, and there are significant structures that crisscross this property, and they have broken the rock up, the underground, the system underground, they've broken it up. So you're dealing with a porous system that's got the ability to absorb a lot of fluid from the underlying hydrothermal system, which is where the gold comes from. So the structural control is very evident, and it's a very important part of this, and in our view, it's an excellent situation structurally. The geological model we're following is well known in the literature, and it's called a high sulfidation system sitting on top of a porphyry copper below. And that means it has an impact on the number of tons you're looking at. High sulfidation system on surface is very big, but it's not extensive. It's not large tonnage. The porphyry below, if it's there, and it's going to be, I think, there and very close to surface, will take the volume, the size of the mine, to a new level. And it could be like a mid-sized porphyry, 300 or 400 million tons of mineralization. The property is part of what we think we have a developing cluster of porphyries on this property. So there's two for sure. That's Taca and Sarita Este, and we've now found surface evidence of 3 or 4 others to the south. So this is a very, very prospective area, and we're going to get a lot of interest from it. The mineralization is volcanic hosted, and that's common. And we have a series of alteration systems, and we've done a thin section analysis on 12 of the rocks from the property, and I have that report. I have our senior geologist working on a summary of it, and we'll have that summary next week sometime, and we will put that in a news release. The geology is straightforward, well known. The mineralization, it consists of pyrite, gold, quartz, and copper. Very simple. We have not done any metallurgy on the property. We have to do that, but it looks like the metallurgy is going to be very favorable. We have no mineral resources that we can talk about at this particular time, even though it's a big system. The mineral resources we're planning on drilling this property in February, late February perhaps, and that will be the beginning of developing a mineral resource and a metric for the company. The mine category we're looking at is open pit. This is right on surface. It's a big system, and it will make a very nice, large-scale, rich porphyry system. The permitting is in place. We're permitted to trench the property, which is our next step. And it'll be an easy step to get to the drill program. We'll define drill holes, and we'll get there in February. There's no construction issues on the property, and there's nothing there. Basically, at this time, there's no infrastructure, no buildings. We will have to use a camp, which escalates the cost mainly, but it'll be a 4 or 5 month program to get to the metric size. Project economics, well, I can give you a back of the envelope. They look pretty good. These porphyry systems below are normally 1 to 3 grams per ton, and the Sarita Este has many assays over 10 grams per ton. So if we can develop a metric and develop a deposit, it looks like it's got a chance to be a very valuable property. And that's what we're going to do. And we're in the last stages of it being grassroots. It'll be called a development prospect after we finish this program. Very exciting. It could be a very large deposit and make a difference to the shareholders and Cascadero. We're excited about it, and we're really looking forward to get on with this thing. And we have the money in place to do it, so everything's going to work out pretty good.
Bill, where's Cascadero traded and under what symbols?
It's traded on the TSX Venture Board. Symbol is CCD, and it trades at around 13 cents, which makes it about an $18 million market cap. And we think, I think it's grossly undervalued, even given that we don't have a drill hole. But you've got to keep that in mind, right? Drilling is the only way you can create value on a property. That stage is coming up, and the stock will respond, obviously, with results. This is a brand new discovery, and it's got all the features of a very important deposit.
Bill, how can people find out more information about Cascadero?
Our website has the mapping program that we started with, and it shows the structures. We've got maps in there, and some of the grades are in there, some of the assays are in there. And that's on our website. And we have several internal studies that we did ourselves. One of them is going to be ready next week, the new one that our geologist is doing. But if anyone has a further interest in it, just email me, put a question in there, or whatever you want to know, and I will answer you and send you the information.
And what's the email address?
The email address is bill@cascadero.com.
Bill, thanks a lot for the update.
Okay, Jim.
I've been speaking with Bill McWilliam, President, CEO, and Chairman of Cascadero. We were speaking on January 18th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.